Have you applied for a mortgage loan and you were approved and now you want to go out and purchase new furniture for your new home? Please don't do that. And I'll tell you why. So stay tuned. I got you covered. Hello and welcome back to another episode of Lynette Selby Real Estate. In today's video, we are going to discuss the 5 things to avoid after applying for a mortgage loan. So let's get started. So when you are purchasing a home, it's a good idea to keep your income and your credit profile as close as possible to how it was at the time of that application. So when you go and make large purchases, especially using credit, this may increase your debt to income ratio. And when this happens, you may no longer qualify for that loan. So please resist that urge to go out and make those large purchases until after closing. Another thing to avoid is depositing large sums of cash. Okay, so lenders will need to track and trace your money, and cash isn't very trackable. So before you make a cash deposit in your account, make sure to discuss the proper way to document that transaction with your loan officer. By doing this, will prevent any possible issues with your loan's final approval. The next one we will discuss is do not co-sign on a loan for anyone. I spoke about this one in another video, so to watch that, just click the link above. I think it's right there. So when you co-sign on a loan, you will also be responsible for that loan and the repayment for that loan. So this will also increase your debt to income ratio, and it could possibly affect your credit score and could make you ineligible for getting final approval for that mortgage loan. So don't ever co-sign for anyone while going through the process of applying for a mortgage loan. So next is to not apply for any new credit. Like we just discussed, applying for new credit, no matter what it is, will affect your credit score and your debt to income ratio. Having a lower credit score could possibly increase your interest rates for that loan, or it could cause you to no longer qualify for the loan. So I know it's tempting to go out to Home Depot or Lowe's once you're under contract and, apply for a store card so you can buy those brand new appliances for your kitchen. But please don't do that. Wait till after you close before you open up those new lines of credit. And the last thing to avoid while applying for a mortgage is to not close any of your current credit accounts. So I know this one may sound a little odd, but trust me on it. Many buyers believe having less available credit makes them less risky and more likely to be approved, but this isn't true. A major component of your credit score is the length of time in which you've had the line of credit and the total usage of credit and your available credit. So closing accounts, it actually has a negative impact and will have a negative impact on your scores. Always be upfront with any changes you have made or you're thinking about making to your credit profile. Talk to your lender about it. And a bonus tip, don't change your employment status or change jobs while you're applying for a mortgage. This also can cause a mortgage deal to completely fall apart. Ultimately, it is best to fully disclose and discuss your intentions with your loan officer before you do anything financial in nature. So those are my tips for the day. I hope you've enjoyed the video. Remember that I am a resource for you all, so if you have any real estate related questions, leave me a comment and I will get back with you. You can even schedule a quick call with me, and I will leave a link to my calendar in the description box, so you can schedule a call with me like that too. So thank you so much for watching the video and supporting the channel, and I will see you guys next week. You take care. Bye-bye.